Thank you, Jimmy. Good afternoon, everyone. So I'm here to talk to you about Tokenized, which is building a token platform for the financial system. So before I start, could I ask who's got any familiarity with what a token is and how it might be used? Okay. So some background on myself. So I'm an engineer at heart. I happen to have taken a diversion into the world of finance for the last 25 years and worked for some of the largest investment banks building complex derivatives trading and hedge fund businesses. And as Jimmy said, I'm now running the business for Tokenized in Europe with responsibility specifically of achieving our regulated financial licenses. So our starting point is a belief that BSV will become the real-time gross settlement system for financial transactions. So real-time means, 2 seconds, sub 2 seconds to settle, which for a lot of traditional finance is very fast. You're still settling between big banks, currency transactions that settle if it's against the US dollar and the Canadian dollar, it takes a day, and if it's any other currency, it takes 2 days. And that's really quite literally because it requires humans who work office hours. And you need to have the ability for people to come in the office, raise a query, contact the other guy, discuss it, and then solve it before 2 days is up. So real-time is super important. And gross settlement, what we're talking about there is, for a lot of financial transactions, if I send you something and you send something to me back, I might have delivered my thing before you send yours. You may never deliver your thing, and I'm out of pocket, I'm at risk. And in many cases, that's solved by having someone in the middle, an intermediary, a transfer agent, an escrow agent, who holds those assets safe until both pieces of the puzzle exist, and then he delivers and honors the contract. And that transfer agent charges a fee, quite a significant fee for that service. So we've developed a tokenized protocol, what we call the tokenized protocol. It's an open source protocol. It is a messaging standard which posts messages to the BSV chain. And those messages describe a number of common operations that you would perform within a financial transaction system. So you can pass, store, and authenticate those messages that comprise commercial records, and we'll talk a bit more about that. The framework supports tokens. So a token it's a unique identifier, ultimately a number, plus some data that tells you what that number relates to. And that is a pointer of something that's happening in the real world. And that something could be, it's a pointer that if I hold this number, I am the owner of that screen. Or if I hold this number, I'm obliged to perform against this legal contract that relates to, I don't know, delivery of tractors or whatever. Some real world thing that's documented in a legal contract, and the evidence of that obligation or that ownership of that thing is evidenced by a digital token, a number. And that number can move around from Bitcoin address to address. And whoever bears that owns it, holds it, the asset and the obligation, just like if I gave you a 10 euro note, okay? So, so that's tokens. In the real world, excuse me a second, in the real world, contracts, legal contracts are a set of rules that have been written by the lawyers using legal terminology. And they look quite a lot like computer code, right? If this happens, do that. On the 1st of January, pay an interest payment. If this thing happens, then we need to restructure the contract in a different way. And those contracts are governed by the courts and the rules of the land. In a world where we're moving everything to the Bitcoin BSV chain, we'd like to move that legal contract as much as possible to the Bitcoin chain as well. And where humans previously would have operated those contracts and moved money around and performed various actions, we'd like that to happen automatically on the chain. automatically so we can be certain that it will happen. We're not reliant on a third party to perform some function. And we can also audit that as well. So what a smart contract is, essentially is a piece of computer code that embodies the rules that the lawyers have written in the big, verbose legal contract. And that smart contract, typically, like any contract, will require some data. So it might be, I've borrowed some money from you, and I need to pay you some interest on the 1st of January. And the interest I pay you is 3% above the European central bank rate. So the contract needs to know where to go to get the central bank borrowing rate. So it will go to a trusted party. It will go to an oracle for that contract. So the system also supports the concept of oracles, which are trusted authorities who are expert on a particular piece of data that might be required in a contract. And finally, the protocol supports messaging. So when I negotiate a contract with you, there's usually a preamble. We discuss terms, and then the lawyers document that. Well, if we ever come to a court of law and we contest that contract, that preamble, that discussion about what was the intent that was written up by the lawyers, that discussion of intent is important for the courts to also consider. And those messages back and forth are captured and recorded on the chain as well. So what we're trying to build is something that captures the entire conversation and the entire body of transactions that a corporation will include as it goes about its business. It might be sales invoicing. It might be contracts for services. It might be quotations for future work that's been proposed. It may be all the payments through service to service providers. If we can get all that data on the chain, then we have a very powerful repository of immutable, unchangeable, trusted data. So the reason we believe BSV is the perfect, and tokenized protocol is the perfect solution to this is we're creating a universal source of truth for all commercial records. And as soon as you have that, then a lot of things become possible. So currently, commercial firms will employ auditors that check that systems and processes and the data that comprises the financial records can be trusted. They have to do that for maybe regulators, they maybe have to do that for the shareholders. They audit the operation of that firm. If all that data is stored in a trusted form on chain, then auditing is trivial. It is very low cost. As soon as it's low cost, then there's things you can do with corporate entities that perhaps you couldn't do before. Why the BSV network? It's free from organizational political risk. It is a community of technology providers stamping transactions as they arrive on the chain and recording them in perpetuity. And the incentive structure, the proof of work, the fee for work done incentive structure encourages them to get ever faster, develop network throughput, increase transaction speed, and make that ever more resilient. I checked with Shadows this morning with Steve, and he confirmed that the network has had 100% uptime since 2013, which 5 nines is great, but 100% uptime, that's superb for a piece of technology. And that's because it is this super resilient collection of technology service providers. The tokenized protocol on the BSV chain supports the movement of assets with no settlement risk. So I can send something to you, and you will send something back, so I can deliver a token, and you can pay me 10 euros. But either both transfers happen or neither transfer happens. It happens as an atomic swap in one instant. There's no central clearing counterpart to control that, and that's important because that is a friction to the financial system. It's a cost. You know, think MasterCard and Visa. They're charging merchant transaction fees of 2%, 5%, 10% to the gaming industry. In the financial world, we have exchanges that organize markets for buying and selling shares or financial futures. They provide an organized market, they provide data, and they settle transactions. The Chicago Mercantile Exchange, one of the biggest in the United States, operates on a profitability over the last couple of years of up to 50%. So in 2018, it made $2.5 billion on a turnover of $4.5 billion for being a central clearing counterpart. That is a cost for all of us. It's about $1 for every 100,000 traded. That's a cost for all our pensions and our personal investment portfolios, which would disappear if we could operate with microtransactions and micro low-cost fees on the BSV chain. And microtransactions, very low-cost fees, make some things possible which we can't currently do. So with fees in the order of a fraction, a tenth or less of a cent, not the $1 per 100,000 in the futures market, a fraction of a cent, then we can do things like I could set up a company, and in that company I could deposit a car. I could sell 100,000 shares in that company. I could then lease that car to an Uber driver, and every month when he makes his service payment for that lease, that could be distributed to 100,000 shareholders in my company. And I can do that because that lease payment divided by 100,000 is a very small number, but I can send microtransactions through the BSV network for incredibly low cost. And because that company is administered on the tokenized protocol on the network, all the transactions are on chain, the cost of the auditing, the cost of making sure that that company I own is financially managed appropriately, and all that reporting and et cetera can be very, very low cost. So you could imagine situations where people own portfolios of properties all around the world, cars, shares. The possibilities are endless, really, once you collapse those costs down towards zero. And this is all made possible by smart contracts. So smart contracts, again, are a piece of code that watches messages on the BSV network and then performs an action. And the code represents what's been written in the legal contract. So it's a method of automating a legal contract. And it's the cornerstone of everything. It removes the human process, it removes the cost and the fallibility of the human process as well. So ultimately, everything we do is subject to a contract. I have a £10 note in my pocket, and it says on it, I promise to pay the bearer the sum of £10, signed by the Governor of the Bank of England. It's a bearer instrument, which is a form of contract. It used to be redeemable against gold, not these days, but everything is a contract. Whether that be a loyalty voucher, a cinema ticket, digital cash. Digital cash for us means a token that evidences ownership of real cash, fiat cash, in a protected, segregated, traditional bank account that's regulated by your local banking provider. So, for instance, if I had a tokenized digital pound, that represents a pound, may be held at HSBC in the UK, and it's segregated from the operation of tokenized, and it's protected by the UK banking rules. It's not a stable coin. Okay? Private securities, we can tokenize private securities, debt and equity, but also public securities, bonds, IBM shares. Imagine what was possible if we tokenized the whole of the major stock markets. We could build investment portfolios using digital securities, digital token securities that can transact fractions of a cent, instead of that £1 per 100,000 on the CME. And fund managers could create funds of digital securities and then issue shares in that fund, which themselves are digital tokens. And people could build funds of digital funds, and on it goes. And with those very large low transaction costs, that would ripple through to the end investor. Potentially anything that can be described as a contract can be tokenized. So let's just briefly touch on what smart contracts can do. Anybody can get onto the network, can post a message which requests the smart contract to do something. It's an automatic process. I can post a message to say, create a new contract, and the smart contract will do that. Create a new asset. I can request a transfer to you, and you respond and approve that transfer, and the smart contract will look at that, establish whether that is a valid transfer, whether I'm permitted, you're permitted, whether our local currency regulations allow it, whether we're both we're not retail investors, maybe there's some restrictions, maybe I can't buy them because I already own too many shares, and so on. That can all be built into the smart contract, those rules, and if approved, settlement will occur atomically on the network. Any tokens that represent corporate equity, shares, are subject to governance operations. People vote. We can put a request for a vote into the Bitcoin network. And the smart contract will say, I know how to do that. I need to send out this message to all the current shareholders, asking them to respond, whether they approve or don't approve. And it will collate those. And if that results in a certain operation, maybe the removal of a director, it can process that through the network as well. And finally, we all live in a world of laws of our land, laws of the contract itself. And courts may be investigating an event and want ownership of tokens to be frozen, pending a result of a court case. They may be thawed, unfrozen, and released, or may be confiscated by the authorities. Again, all these actions are executed by the smart contract in response to a message put onto the chain, which means people can audit that. People can audit whether unnecessary freezes are taking place, whether confiscations took place, and who requested it. So it's designed to be, as much as possible in the ethos as BSV, an autonomous system which doesn't rely on people behaving well and doing their job properly, and doesn't require fees to be paid to an intermediary. So let's give a quick example of someone issuing shares. And let's say we have an issuing entity comprising a board of directors, tokenized helping them, and a smart contract that sets the rules for how they want to issue their shares, a shareholder agreement sort of implementation. They could send a message to the BSV network, and that would generate the shares which could be distributed to token holders, their shareholders. But we live in a world of legal identities, and it's important to know, although the BSV network operates on pseudo-anonymity, we need to know who owns our shares. The legal authorities need to ensure that those shares are only held by people for whom they are suitable. So we offer identity oracles. We offer a know your client onboarding process where people present passports and driver's licenses and so forth and go through an ID verification process, which means that as the contract operator, we know how to match real people against Bitcoin addresses and what they hold there, and in turn, their contract obligations. So if things go wrong, they can be pursued through the courts in a traditional way. Government agencies are interested in ensuring that markets operate efficiently and need to be able to audit and evidence that, and that's been one of the challenges to date, to get traditional finance and corporations comfortable with the new technology and the benefits that BSV network brings, but help them realize that actually it's an improvement on existing processes and it's completely legal and fits all their normal due diligence and regulatory obligations. Auditors will want to be able to get data from the BSV network to check that things are running correctly. And finally, we'll have event oracles which feed into the network data, which smart contracts can pick up. And in my example before, it may be that on the first of every quarter, a dividend is published, and the company's oracle publishes the dividend, and the smart contract can read that value and transfer money from the company's dividend account to the individual shareholders of those tokens. So if we look at corporate governance, we need to be able to think about how people can govern companies. And traditionally, there's some sort of threshold voting regime, and we might have a CFO, CEO, and COO. And the smart contract will take instructions from them, instructions that they send into the blockchain, send into the network. And it may be that there's a threshold of 2 of 3 are needed for certain actions. And that's taken care of with them signing instructions. And they may put an instruction into the network that they want to create a board of directors. And board of directors is anybody who holds the board of director token. So if I hold this thing, I have the powers of a director. So they can create board of director tokens and distribute them to the individuals who are their directors. They can also create traditional share tokens, different classes with different property rights, different dividends and so forth, and distribute them to the shareholders. Wouldn't it be a wonderful thing if the Bank of England said we'd like to create a digital pound on the tokenized protocol on the BSV network, and the Bank of England operates with a court of directors and maybe a committee and a software agent, again, subject to some threshold rules, 5 of 7 people, or or any of those can have authority to interact with the smart contract that operates the digital pound. And again, to be a director of the Court of Directors at the Bank of England, you have to hold a token, which was originally created by the smart contract in response to a request by one of the administrators, and those directors have authority to make decisions over that digital pound. And of course, there's an authority oracle, which is, reflects court decisions and so forth. And then people can hold that, you, me, and the residents who want to own digital pounds. So where is Tokenized in its journey? We see there's a number of phases that we're working through. The first phase for us is to make digital tokens appealing. There needs to be a means by which people can buy and sell them. So there needs to be a method of exchange of wealth, and that's e-money. And as I said before, e-money for us is a token representing real fiat in a regulated, protected banking world. And we're currently applying for our UK regulatory license with the FCA for e-money. It's uncertain how long that takes, but we expect that to be through by third quarter, late third quarter, fourth quarter. We've been working hard behind the scenes to build the technology to operate those smart contracts and interact with that via a super wallet. That will be rolled out during the course of the summer to allow non-regulated tokens, so vouchers, cinema tickets, and so forth. And as we submit our application for regulated e-money, we'll also be following that with applications to issue securities tokens as well. We're starting initially in the UK, followed by Europe, Canada, USA, Singapore, Australia, and New Zealand. So we believe that the solution for commerce is a protocol that allows you to capture everything about your financial operation, from capital raising through to interacting with your suppliers and dealing with contracts, and capture all that on the BSV chain. And as that ecosystem grows, in an ideal world, if everybody were on there, then we wouldn't have disagreements about contract, about truth, what the financial health of companies were, transaction costs are small, transactions are high speed, then the costs collapse, and that enables a lot of business models which are not possible today. So we're really quite excited to be associated with that. Thank you very much.